Managing a meaningful impact strategy in the listed equity market is quite challenging. The first challenge that we have is to make sure that we can make sense of the data that we have. And to do that, you need to have your own qualitative research process. And that's because most of the data that you see on the market today is not comparable. They follow different methodologies and they don't correlate to each other, the scores that you see. So it's very important that you do your own qualitative homework to understand which companies are the most impactful companies for you to invest in. For example, you might find a fast food provider being benchmarked against an education services company, being benchmarked against a fitness provider, or you might find a software or technology company that's investing or providing their product to companies that are making drones for war situations. So it's very important that you analyze the company holistically and that you fully understand all the potential positive and negative impacts of your investments. That's the first challenge. And the second challenge is to find your additionality. And to find your additionality as an investor, the most important thing you can do is to engage with the companies in which you invest. And that means you talk to them on a regular basis, systematically, with a clear objective. You're clear about what your objectives are to the company. And that conversation must be focused not just on negative impacts that the company might have, but also on encouraging them to boost the positive activities that they're doing. That is really where the investor additionality is in a listed equity impact strategy. So additionality for us is all about what we actually do as an investor in our portfolios, in our funds. We consider our value add to be largely the research process that I talked about in terms of the impact research and making sure that the data we have makes sense when we're building the portfolio, and to actually look at multiple sources to come to a holistic understanding of the companies that we are investing in. That's part of the value add. The additionality on top of that is indeed, as a shareholder, to be able to talk to these companies and to exercise your shareholder rights to vote on the company stock that you receive, and to, aside from that, engage on a regular basis with companies regarding their positive and negative impacts. Part of that is not just about encouraging behavioral change, it's also about just encouraging very good systematic disclosure. And that disclosure that you encourage helps every other investor behind you that's trying to invest in impactful companies, because they get better data out of the companies and it allows them to identify the right companies to invest in, and it helps the whole market move towards impactful companies. So the biggest challenge for us is really this data challenge that I referred to earlier. The problem is that impact data is just nobody's incentivized to release the right set of metrics for impact. If you think about it from a corporate perspective, if you're sitting in a company, you're always going to be encouraged to disclose what makes you look best in the market. And there is significant evidence to show that if you disclose negative impacts, there is an impact on your share price. So of course, companies, unless they're forced to, are not going to disclose things that make them look bad. So how do you obtain a holistic understanding of how these companies are doing with regards to their net impact, their positive impacts and their negative impacts? You need to actually talk to them and get a sense for how they're doing. That is a fundamental premise of what we have to do. Because otherwise, you will look at a glossy report from a company, you will never really understand how much impact is embedded in their day-to-day operations, how well they're being managed. So active engagement is not just about encouraging impact for us, it's always been part of what we do as investors. We've always considered ourselves to be active managers. That is fundamental to who we are as an asset manager. We are active managers. And being an active owner of the securities that we buy goes hand in hand with that. If we weren't talking to the companies that we invest in, whether it be in their bonds or their shares, then we wouldn't be meeting our fiduciary duties to our clients. We wouldn't have as full an understanding of the companies we invest in as we do. And so we think it's absolutely essential as an active manager to be an active owner and to be engaging with companies, to be talking to them about their operations and about their products and services, and also to be voting the stocks when we get the opportunity to, filing resolutions if that's necessary, and really demonstrating that we're not just sitting by as silent investors willing to just watch whatever they do.